Oh, Bitcoin. I am forever confused about this asset and how to manage it inside of my portfolio. It has always been the one exception to my long-term rules-based investing mindset. And look, Bitcoin has been an incredible play for its holders, and I'm no exception. I've doubled my money twice. But at the same time, a big part of me still thinks that it could end up valueless at the end of the road. So yeah, it's confusing, but I'm gonna break it all down the best I can in this video. We'll cover why I chose to buy Bitcoin, what role it plays in my plan, and how I'm moving forward from here. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. If you get value from these videos, smack that like button and consider joining the channel membership. Your support keeps the content flowing, and it helps us reach more people. A quick heads up before we dive in. Snowball Analytics and Seeking Alpha both have great sell prices right now during Black Friday. If you've been thinking about trying either one, and I highly recommend them, this is the perfect time to jump in and save a lot of money. Links in the description below. You know what time it is. Let's grow. Bitcoin. I first heard about Bitcoin from a coworker of mine back in my Boeing days, right after its inception. Side note, this guy was all in and buying it like crazy back in 2010. I have no idea if he held on to it, but if he did, well, that turned into quite the investment. But I didn't get serious about learning more about Bitcoin until about 2020. I read multiple books about it before investing a single dollar. I genuinely understand how it works, the economics, the mining, the halving cycles, the blockchain, all of it. And even with that knowledge, I'm still skeptical. I thought back then, and honestly I still think today, that Bitcoin could end badly. But I also think there will be massive gains along the way. And so far, the gain side of things has played out nicely. Okay, I've pulled up Bitcoin out here in Seeking Alpha, where I do all of my research on stocks and ETFs. And you can see that right now Bitcoin is at $88,000 per Bitcoin. And I just have some history, and you're probably thinking, wow, Jeff doesn't know how to use a computer. This is clearly off because NVIDIA is a flat line with the other ones down here. Well, what I did was I punched in, and it would only let me go back to, what was it? 7/18/2010 on Seeking Alpha, and you can see this one's 7/19. Sometimes they don't line up perfect. 7/19 and 7/19. So this is apples to apples. It is total return including dividends. And you can see here that Bitcoin is up a modest 172,126,404%. It's slightly outperforming the market, which in that time is up 686%. VGT, which as we know has crushed the market, it's been a major growth market. It's up 1,455%, so tech has dominated, but it's fallen a little short of Bitcoin. And then NVIDIA, which if we had a magic hat, you might say, well, I'd pick that one. During this time, it's up 75,223%, which again is a little less, as you can see here. NVIDIA is right down here with these guys with some nice gains. But Bitcoin's a bit higher up here. Now, of course, I'm saying this with a little sarcasm. This is real. I mean, by the way, this actually happened, but you might be saying, realistically, what if you didn't get in, like my Boeing friend back in 2010? Okay, let's look at the last 10 years. And you can see that things change now. Bitcoin has fallen a lot lately, as you can see here. It's still slightly outperforming NVIDIA, which has been a once-in-a-lifetime pickup, at 23,000% up to NVIDIA's 21,691. And then it's a little bit ahead of the market still at 274. And VGT, the tech fund, has done incredibly well, by the way, over 10 years. This is amazing returns at 605%. And now if we zoom it in even more, you can see that NVIDIA does crush Bitcoin in the last 5 years here at 1,286%. VGT is up a measly 130. The market's up 96%, and Bitcoin's still up, even with its recent fall, 352%. Now we'll zoom in one more time to 3 years, and you can see NVIDIA, again, genie in a bottle, up over 1,000%. Bitcoin up a comparatively moderate 418%. But we look at VGT, which is tech. I mean, this clearly I'm using NVIDIA as a one-off example of something that hit just right. And you can see the longer we zoom out, Bitcoin absolutely obliterates it. And then it still crushes the market and the tech funds. The market at 72, tech funds at 117. In the last 3 years, even with this major drop recently, at 418. Whether you love it or hate it, it's inarguably one of the best performing assets since its inception. But here's the part that scared me away. Bitcoin doesn't produce any value in the traditional sense. It's not a business. There are no cash flows. And the industry around it has a lot of fraud and blowups. I was caught in some of that myself. My Bitcoin was frozen for over a year on the exchange I used. Thankfully, I eventually got 100% of it back, but that experience shook my confidence. I was ready to take my long-term gains and dip. But right as I was preparing to exit, and I'm genuinely not making this up, a new kid on the block changed everything about how I feel about securely holding this asset. Bitcoin ETFs. A few spot Bitcoin ETFs finally launched in January 2024. After digging through the list and doing my research, I decided to roll with IBIT from iShares. And apparently, I picked the right horse. IBIT has become, by far, the biggest ETF from that launch cycle, with over 65 billion in assets under management. It also has a very reasonable expense ratio of 25 basis points, and it allows me to hold the asset inside a traditional brokerage account, in my case, E-Trade. And honestly, after what I went through on my crypto exchange, it was a no-brainer. I want my Bitcoin somewhere that can't freeze my withdrawals, can't go bankrupt with my coins, is fully regulated, and held next to the rest of my long-term assets. And after crunching the numbers, ironically, holding the asset with the 25 basis points of an expense ratio arguably made it overall cheaper for my system compared to the high transaction costs of the crypto exchange. I sold small slices of Bitcoin and bought IBIT every week until I had slowly transferred my entire position over to E-Trade. The price was right, safety was restored, and everything felt great. But then it hit me. If Bitcoin crashes the way I think it could someday, I walk away with zero realized profit from IBIT. I would just watch the ETF fall down to zero or close to, and that would be the end of it. The new question became, when exactly do I sell this thing? BTCI solved my problem. I'm going to keep it 100 with you. I was ready to sell my Bitcoin position on November 12th, 2025, when Bitcoin was sitting at about 103,000. And that had nothing to do with hitting an arbitrary price target. It had everything to do with my recent retirement and the new cash flow needs that come with it. At that point, I was fully prepared to dump the entire proceeds into QQQI. And that's because I love the covered call strategy, and specifically on my favorite index, the NASDAQ 100, which I believe in the future prospects for a lot more than Bitcoin long term. But here's the thing, part of me still wanted that exposure to Bitcoin. I just didn't want to be the guy left holding the bag when the music stops. And that's where BTCI enters the picture. So yes, I did end up selling my entire IBIT position on November 12th, 2025. And I took the proceeds and I stuck it all in BTCI. By dumb luck, the price difference between when I sold and when I rebought ended up covering my long-term capital gains tax perfectly. Same number of shares, clean swap. But let me show you specifically why this strategy makes sense for my situation. We've pulled up BTCI out here in Seeking Alpha as always, and you can see it's the NEO's Bitcoin High Income ETF. Now I start here on the summary tab, and the first thing that breaks my hard rule by a lot is the expense ratio. You can see that the expense ratio is a high 99 basis points, and I don't love that. But much like QQQI, and I don't believe I mentioned this with me on screen in this video yet, I don't script these very well, its dividends that it pays, that we'll jump into here in a minute, are almost entirely tax-free in the year that they're paid. So that is huge if you're in the 22% tax bracket or higher. And then the fund assets under management is about $785 million. And this thing's pretty niche, so I agree that most people should not invest in it. Most people should invest in IBIT and buy and hold if you're not in retirement or needing cash flow. And especially if you believe in Bitcoin long term. We're out here on the dividends tab, and now things get a little silly. You can see that the dividend yield of BTCI is 38%. And you can ignore this trailing 12 month. I don't think it has the data there to punch that in. But that's an absurdly high dividend yield. And its sustainability, I think, is solid because it's a volatile asset. However, it relies on Bitcoin not to crash completely. So you're milking this high dividend while Bitcoin is still around and hopefully still going up. There's always a gamble to it, just like holding IBIT. But when we bounce out to the dividend history tab, this is where it gets pretty impressive. If we scroll down here to the distributions, you can see that this dividend is regularly paying in the $40s, $50s, 40s, 30s, and I'll just kind of scroll through them here. I won't read them all off, but the consistency is relatively high with these dividend payouts. And you can see it here if you prefer table form. So yeah, you are a bit all over the map, but it seems to stay above 30% on the yield, and we'll see how sustainable that is long term, just like we'll see how sustainable Bitcoin itself is long term. Okay, we're out on the charting tab, and if you've been watching my channel, I've explained in depth QQQM versus QQQI and why QQQI goes down less, so it has a higher floor, but it has a capped ceiling. And that's the same concept with BTCI versus IBIT, which is just buying and holding Bitcoin. When you use these covered call strategies and the asset decreases in value, it's a win because the strike price doesn't hit and you get that guaranteed income. It raises your floor. You still lose when Bitcoin goes down. As you can see here, the total return for year to date is negative 3.7, but IBIT's actually down, so Bitcoin itself is down about 8%. Zoom it out a year and you have a same story, slightly more exaggerated. But the reason is because you started here and at the end, you're down. When the raw price of Bitcoin drops, it hurts IBIT more. It doesn't have that guaranteed income shielding you from the drop. However, I do think IBIT is a superior long-term buy and hold asset if you don't need cash flow. And actually, let's see if we can prove that out. Okay, good. I was hoping this would be the story. What I did was I looked at the inception date of the newer one, and that is 10/14/24. You can see these returns are both, I guess this one's 10/17/24. And IBIT is now ahead. And you can see that overall, Bitcoin has gone up and you've captured more of those gains. So with IBIT, you're up 27.68% since the inception of BTCI. And BTCI is only up 21%. So you will, over time, give up your ceiling. And that 1% expense ratio, that dirty 99 basis points, is included in this. But it comes at a cost. So if you believe in Bitcoin and you believe in its future of it going to the moon, I would highly recommend IBIT or holding Bitcoin if you're comfortably outright on an exchange. But if you are on the fence and dicey but still want some exposure to capitalize on the gains now and get most of the upside, like myself, I would recommend BTCI in that situation. It cash flows for you, gets most of the ups, and reduces the downs. So again, the logic is very similar to QQQI. And I can't stress enough that these dividends are return of capital, over 95% of them, so they will not be taxed in the current year. And then you get to utilize long-term capital gains as the cost basis is reduced. So from a tax perspective and an overall cash flow, I love these funds compared to, let's say, JEPQ, like QQQI compared to JEPQ and all the like competition out there, because you save 12 to 22 and higher percentage on tax at the high, but way lesser evil expense ratio. BTCI pays massive dividends and it outperforms IBIT during Bitcoin downturns. It gives up some of the upside, just like QQQI gives up some of QQQM's. But for me, this is the perfect level of profit taking. And here's the best part. The dividends will fully cover the cost of this investment in about 3 years. Meaning, I found a way to hodl Bitcoin forever without ever needing to worry about profit strategies again. Another thing I'll forever be grateful for is all of you awesome channel members. We didn't have any new members this week, but a huge shout out to the 29 of you that have been here all along. I really appreciate your support now more than ever, and you help inspire me to keep pumping out what I hope is quality content. And check out one of these two videos to continue down your path to financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you in the next one. Peace.